Bitcoin breaking that 92,500 level, really interesting. Broke into the 80s again. And we got to talk about this because I actually take this as a bit of a sentiment barometer for retail trading. You know, I like the idea of Bitcoin, but you guys know if you watch my channel a lot that I am not really a buy and hold kind of guy for Bitcoin. I have mostly, you know, I've traded Bitcoin quite a bit, but I'm not like a long-term, I wouldn't say I'm a disbeliever. I'm just, you know, I prefer to trade it. It's a great momentum vehicle. Well, right now, momentum for Bitcoin has really shape shifted here. In fact, I was looking around at the crypto space on Twitter. What do you call that? The Twitter crypto crowd. They're kind of having a bit of a panic here with that level of support holding for so long. And now you've got, you know, what was supposed to be kind of Trump presidency. This is the time of the crypto world. You're seeing some disappointment there. And I actually don't particularly think that that's over, especially if we close like we did yesterday at the bottom of this range. You know, that was a deadly candle yesterday, and now you've got the follow through. So, you know, it's kind of like when NASDAQ closed with that deadly candle on Friday, you had the bit of a dead cat bounce and then the follow through to the downside. There's some interesting stuff happening in this market right now that I do think we need to acknowledge. A lot of risk assets, guys, have had a particular behavior that is seemingly changing in front of us. What I mean by that is if you look at this chart, right? If we take crypto, Bitcoin as our risk proxy, what you notice about these is that moves lower are not very elongated. They're not very extended. There's not very much follow through, right? There's very little bearish follow through in this chart for the last several years. You had this kind of correct sideways downward market, but this is child's play compared to what Bitcoin is used to in serious drawdowns, right? This was a 34% drawdown. Give me a break. You're talking about the crypto crowd who's used to 90% drawdowns in cryptocurrency. So my point with showing you this is that, look, the sentiment here, could Bitcoin go to 150, 200,000, $1 million? Sure, maybe it does. I'm not going to be the one to tell you, oh, it certainly is going to. You know, there's plenty of that on social media. Right now, momentum has shifted bearish. And I think that, you know, there's a bit of a sentiment shift in this market. A lot of people went into this year thinking Trump equates to rosy and rainbows for markets. And, you know, look, you might still get a good 4-year period in the stock market, but what if the first year is ugly, right? We're starting to see risk assets not hold up well. It's such a unique character shift. You know, I stare at these charts every single day. I know many of you guys do as well. What we've noticed here, look at this, spikes on the bottom, holding support levels, resiliency for risk assets. Never mind that it's Bitcoin. You could point the same thing to stocks, right? You could even point to one of the weakest areas in the stock market. Small caps have still been in this kind of grindy uptrend, even though they're kind of the worst performer of the group kind of thing. And yet still what you can see is that for some time, pullbacks were bought reasonably quickly and reasonably aggressively, even on the worst performing index of the major four that we discuss on this channel. I mean, let alone look at NASDAQ. NASDAQ dips are bought so aggressively. And now I think you're on the cusp of actually seeing some market momentum shift bearish, which I don't think we've seen in a long time.
Market analysis, free trading courses, edge finder data, and special offers. What do these things all have in common? They're all available for you right now inside of our free Discord. You can click the link down in the description below to join the free Discord today and get access to all of this and more. Stay up to date with all the latest trading information and A1 content. And if you want to upgrade to our Gold VIP Discord that features every single trade that Trader Nick and our other professional analysts take, you can find the links for that in the description as well. So don't wait, go check out the free Discord today.
Look, I'm not short the indices. I'm not making a bearish bet that they continue lower. So I could say this, and what if I'm right a bunch and I don't make any money out of it? I'm willing to say that. But there is also the possibility that, I think you have to get more price action short-term decidedly bearish if you break this key level on the NASDAQ. Now for Bitcoin, I would say chart looks bearish. Chart looks straight up bearish for Bitcoin, right? It doesn't mean it can't reverse and start breaking out to the upside, but right now, this momentum is not pretty. It's why, again, like I said, if you go to the cryptocurrency Twitter side of Twitter, there's a lot of panic going on. Oh my gosh, this was supposed to be, Trump 2.0, Bitcoin to the moon. And who knows, maybe it will be. But right now, there's a lot of headwinds that are pretty decidedly cautionary for markets. You have tariff concerns. That's nothing new. Trump actually reiterated that the Canada and Mexico tariffs are still, I think he used the term, on schedule. And people are like, okay, so we still have tariff concerns. Those, yes, they pushed it out a month, but it's still a real thing, and it still seems like it's happening. He seems very adamant about reciprocal tariffs, basically matching all the tariffs that are imposed in the U.S. Exports. He wants to match them pretty across the board. That seriously shifts a lot of trade relations globally, as the U.S. is kind of centric to it all. So yeah, I mean, it's an interesting time. You also have the breakdown in momentum stocks. Take a look at like Palantir, right? So if you're watching indices, there's some serious bifurcation in this market, some serious divergence between value stocks and growth stocks. Growth stocks are taking a serious tumble. Here's Palantir, peak to trough, guys, almost 30%, 28% down from those previous highs. Take a look at, what's some other names? I mean, you could take a look at Tesla, right? Tesla's gotten hammered. Tesla from peak to trough down 33, 34%, somewhere in that neighborhood. So you're getting some interesting moves. I mean, NASDAQ's holding up, all said and done, pretty well, with just about a 4% drawdown. S&P 500 peak to trough here, we're looking at currently about a 2.6% drawdown. So my thought on this is that these things have room to still pull back further, and it to still be very healthy in terms of a long-term bullish perspective. So I am not saying, oh, look, market's bearish, we're going to zero. But I do think that this market has a lot of headwinds, and I would not be surprised if you do see S&P, NASDAQ take a bigger tumble. I think that a 5% to 10% correction in the S&P 500 is very reasonable. Somewhere in this territory, like if that happens, I'd say that's very reasonable. Probably would be a dip that I'd start buying. But that's just kind of my thoughts on that. So anyways, gold also seen a little bit of a dip here, but look at the resiliency here. This is the difference in price action that I want to point out. You look at crypto indices, what we're seeing here is the candle bodies are closing towards the lows. Whereas with gold, very rarely are you seeing that. And the one time that you did recently, buyer stepped right up. So there's a chart behavior here on a technical basis that looks really strong for gold. I've been saying this for weeks now, but a lot of people are calling for pullbacks. Maybe it will finally happen, but again, not a game I'm trying to play. If you're trying to time the pullback on gold, you may join the graveyard of fallen soldiers around you. It's been a tough grind for gold bears for the last few years. Let's see. NASDAQ opens up here it just opened up. So the U.S. stock market is open now. Here's the 5-minute chart so we can take a look. So we'll see. Again, like I said, I am overall willing to buy the dip on, tech stocks and on companies that I like, financial companies. But I'm certainly not heavy going in right now for the kill, if that makes sense. Like, I have a lot of cash sitting on the sidelines ready to deploy in US stocks. I've been cash heavy. Warren Buffett is super cash heavy. Did you guys hear that? He is incredibly cash heavy. And people will say what they want about that. They'll say, oh, well, he's not trying to time the market. He's not bearish. He's not. But here's the thing. Warren Buffett had the Berkshire Hathaway meeting recently, shareholder meeting. He mentioned that, well, actually, I don't know if he mentioned this, but this is what the crowd heard. He basically doesn't have a whole lot of appetizing things to buy right now. You don't even have to hear him speak to know that if you know he has a whole bunch of cash. Warren Buffett's sitting on a massive all-time record high pile of cash right now in his portfolio that he runs for Berkshire Hathaway. So take that as you will, but actions speak louder than words. You can say, oh, Warren Buffett's not bearish. He's not trying to time it. But him basically saying through his actions, not deploying that capital into stocks, tells me that he simply doesn't have something that's attractive to him to buy. So is it fair to say Warren Buffett is waiting for better deals? Yeah, I mean, this is the value king, right? This is the most legendary investor of all time, and he's sitting around waiting for better discounts, better prices. And you know, sometimes that can feel silly when the market's ripping higher, but when it is starting to drop, you're very thankful if you have cash on the sidelines ready to deploy should you get better discounts and better prices. So yeah, he just finds no stocks in the moment. So Marcus, you could say like, oh no, that's not bearish. I would say that is bearish. If you're saying I can't find good discounts, good deals, then you're saying the market I kind of think is expensive. And if the market is expensive, it doesn't necessarily mean you're shorting the market. I don't think he's short the market at all, but him being cash heavy, some would argue being a cash heavy position is kind of a way to short the market because you're just waiting for better prices. You believe that there could be better prices around the corner. So we'll see, but just some fun things to think about there. Taking a look at the dollar index here this morning. Let's pull that up. So dollar index kind of continues its trend lower here, struggling, it seems like, to really find any to find its footing. Dollar index seems to be kind of shifting from this legendary bullish trend to now kind of a pretty weak bearish trend, in my opinion. You know, we've talked about this many times, the economic heat map flashing red. Not coincidental that this all started turning red, and then to follow for the next few weeks, we've seen bearishness in the dollar. I mean, the economic heat map started printing red. Dollar index has been following through to the downside recently. So I think that's really interesting and something to watch. I do think the dollar index probably has room to continue pulling back. Do I think that the dollar index is, you know, doomed to go way, way down? Not really, because we still have sticky inflation in the United States, which should keep, you know, bond yields elevated, which should be a prop up for the US dollar. But you have weakness in the economic growth department, and that weakness, I think, justifies a bit of a repricing on the valuation of the dollar versus other currencies. And I think that weaker dollar could be something that is potentially bullish for metals. It's the same logic within our system, right? The same reason the chart is flashing a whole bunch of red on the economic heat map is why gold and silver are getting good readings on the edge finder. It's because a lot of that economic data that we just discussed for the US dollar is flashing red. And so when we take that into account, we say, okay, look, economies around the world are seeing a bit of contraction. So maybe it's reasonable to think the dollar index specifically, which is kind of the most important, largest economy, showing some contraction compared to forecasts. Maybe it's reasonable that the dollar gets repriced a little bit. Maybe we do see dollar head back to, 104.5 and lower even. We'll see. But trend right now seems to be to the downside for dollar index. So we'll see. And again, you have the dollar moving lower, but it's not moving lower because inflation is getting better. That's the thing. A lot of people say, well, Nick, dollar down, stocks should go up, right? But it doesn't work perfectly like that. Specifically, if the dollar is going down on growth concerns, usually stocks are also going down at the same time. I had somebody comment on a video recently. They said, Nick, you don't know what you're talking about. Dollar down, stocks up, dollar up, stocks down. And that is an easy thing to kind of think based on the last few years because the dollar going up signaled inflation was rising mostly for the last few years. But that's not how the dollar and the index truly, the relationship works. The dollar index going down doesn't have to be because inflation's going down. Clearly, we see inflation going up, yet the dollar's going down. This can be confusing, and this is why currency trading is way harder than people think it is. The dollar can go down because growth metrics are missing forecasts, and at the same time, you can also have rising inflation. Right? So you have to understand the mechanisms. You have to understand how this stuff works to really score it and to really actually make decisions off of it. That is what the Edge Finder specializes in, is we've carefully gone through every single one of these data points and calculated how it generally should point bullish or bearish for all of your favorite assets. That's kind of the idea behind the Edge Finder. It takes some of the guesswork out of it, and the idea is hopefully it helps you to spot the fundamental trends and understand them easier without having, years and years and years of dedication, like, a lot of traders who stare at the stuff all day like myself do, right? So the goal is to bridge the gap a little bit, make fundamentals, how important they are, they drive the markets, but they can be really hard to get a picture on just listening to content. You can listen to stuff for years and it's still very confusing. So having the right tools is imperative if you want to be a fundamental trader. If you'd like to try out ours, the Edge Finder gives you access to a ton of economic data, heat maps, as well as sentiment indicators. You can track what institutional money's doing through the commitment of traders data. You can pull up retail sentiment, see what the crowd's doing. You can look at the put to call ratio to see what the options volume is looking like. One of my favorite indicators on the Edge Finder. You can actually see we're seeing a big spike up in the put to call ratio, showing a little bit more fear in this market, right? We were very optimistic. When you get down to these lows, guys, what that's telling you is that stock market optimism was very high. Can I show you one more on this? Check this out. Here's gold. So gold, this is crazy. So gold optimism, right? People buying calls on gold reached a peak and has actually cooled off. This to me signals, okay, sentiment's not stretched. Gold could potentially continue its stretch higher. We're not, when we tap into these overextended optimism on the price of gold, huge call demand, right? And gold does trade on the options market. You can trade GLD. You can also do gold futures contracts on the options market. So we can track that stuff. And look, when we have huge call demand, I would say, okay, pump the brakes. That may be a short-term overbought kind of territory, but look at this. We're back to a bit more normalcy here. And that to me signals that gold could continue higher.
Here is what I'm looking at, a little bit bigger picture. So the last few weeks, I've got my, call condors looking good. Those are all profit. That's fine. I don't think I have that trade in any longer. That was closed out for profit back when we started to fade this late February move. Let me double check that. Anything in the 6300s on the SPX. I did take, I used my collar position, which is a sell, call, buy, put, and micro strategy. I did end up closing out for like a $22 gain on the put side, but I reestablished another put, saved me about $5 net. I'm still holding a collar trade with a 310 covered call that's like $60 of credit, which is nice, but I'm going to just hang in there for a little bit, trying to protect the downside. Let's talk through this all today. As Nick just said, TLT is doing pretty well. TLT is up around $9,300. Dog's making some noise. TLT is looking good. I may end up getting some of my TLT called away. If it's in the money, then I'll probably roll it. Otherwise, I might just let it get called away because it's a $2,000 or $3,000 trade per account. So there's still plenty of upside here. I'm only about 14-15% of my max profit. So there's still plenty of profit to go. Time wise, I just need price to get up over 92. But if we're there and I can close it out for mostly my $27 credit, then I'm probably going to do that. So let's see here. I was looking at SPX into the 6,000s. So I do have call condor here. Let me have a quick peek at this account here. So Feb 28th, 1, 2, 3, 4. That trade's looking pretty good for profit. Let me check the numbers on this one. Okay, let me see if I can close this out for a 10-cent debit. That was an iron condor. Closed out for profit on the iron condor. And then March. Same thing here. 1, 2, 3, 4. That is an iron condor. Okay, those trades are still looking fine. Delta Y is still really solid. I'll hang in there a little bit longer on that one. 2, 3, 4. Anything else? March 31st. Yeah, condor stuff looking pretty good. This one, 63.40. This one is the trade I was talking about. This is a call condor, so 63.40 by 50. That's a $10 wide trap. And then I sold and sold. That came in for a net credit. See what this one's trading for right now. Yep, this one should be profitable. So I pulled in a couple of dollars on that. Let me add the math on that. So that was 63.40, 50, 64.20, and 64.45. Crunch the numbers. So minus 36.71, plus 34.19, plus 20.59, minus 17.06. Pulled in a dollar credit on that one with a trap. Right now that dollar is trading for about 5 cents. See if I can just close this one down a little bit. So if I can close it out for like 5 or 10 cents, I'll just take the profit. We should be good. 2, 3, 4. All calls. All right, I'll manage that one in just a sec. I've got a cover call on Snapchat. Coca-Cola got called away last week. Hedges are looking good. So I put them on. That's the important thing. Timing-wise was pretty decent. So E-mini hedges up around $2,100. E-mini hedge, different expiration, about $1,300. Micro E-mini hedge up around $5,500. I'm just going to let those go. Those are there to help protect me to additional sliding. If we get there, that would be on my E-mini side. So I put in the hedge up here near the all-time highs. So far, so good. That's the right direction. You know, how much do I have or what direction do I want to take them? Well, if they're coming down to like the 144, the 200 moving average, that is where I want the hedge to be taking profit. So if we flush lower, and I mean percentage-wise, if we dropped another, let's say 3 to 5%, another 3 to 5%, I'm taking profit on those hedges. We're looking at like a 5,700. I think that's my sell side. This one. So this is a 56. Okay, that one's looking good. This one is same thing. This one is my hedge. I have a pure downside hedge. So my April 30th. Call side. So I've got 61.75, 63.75, and a 61.75 by 5,700 there. So I put the trade on for both. If I just look at the put side management, I've got 62 by 57.25, and I've got 61.75 by 5,700. Those should be the trades to be offering the most profit for right now. All right, so those are looking okay. All right, Japanese yen. Let's take a look at currency strength. I was looking at AAI sentiment, which we had a little bearish positioning as far as the sentiment goes. This is a contrarian play. I'm very curious how this is going to print this week. If more and more, if more and more investors are getting positioned bearish, if that's actually going to offer up a buying opportunity somewhere in here. I don't know how aggressive the bulls are going to be. If they're going to step in, it should be there's a little gap right here around 590 to 585. This is SPX or SPY. So SPX around the 5900 to 5860 zone. The SPY around the 590 to 585 zone. If we get a little nastier out there, this is, we don't know. I mean, obviously the market is sliding for 3 days in a row now. But if we pick up a little bid right in this first gap, that'll be interesting. If we don't, then I'm looking for equal high, equal low. If we measure this move, this is where things get a little gnarly. If we go high to low, and it breaks that low, that measure move gets me to this outer area. So this would be, support and support. We could potentially be looking 550 to 540 zone, which would feel pretty terrible. Straight up, like it'd feel terrible to see this market within, let's say, a month. Flushes from all-time highs down to about 8, 9, 10%. So where does that get us? If we come down to like 550, that's a 10.5% correction on the S&P. That's a pretty big one. Anything in that 10 to, let's say, 12% zone, I'm going to be hopefully just deploying some cash in here and positioning kind of little bites. And if we catch a close below, close above, that might help put in a little bit of a bottom. We'll see if the market's eager enough to buy the dip. Okay. So the nice thing is having cash on the sidelines, being somewhat diversified. Bitcoin's not looking great. Bitcoin broke some pretty good support. I'm around that 91,000 mark. And, there's two levels I talked about. If we break 91, okay, look out below. And then the next level would be around the 75. So we're breaking structure, we're breaking support here. There is a potential bounce off the 200 moving average, but if we don't see an aggressive candle pushing this thing right back above this 91K mark, that's going to be my outlook on Bitcoin. If we don't close back above 91K, this thing still has some pressure to the downside. I would be looking left on this chart. Previous highs around 74,000. Okay. So we're definitely seeing some tightening in the markets. We're seeing some flows that are favoring risk off right now. Bonds are looking pretty darn good. Does this help yields go lower? A little bit, right? Yields are dramatically lower. That's actually pretty helpful to see that yields are down 11% from these recent highs. That's helping our longer term bond prices quite a bit. My call side is 92. I did a roll on this for 92. Let me double check my TLT. 92 sell call for 15 cents, so 21.17. I have to update this in my chart. So this is a 331 rolled to 430. Okay, so I got a 430 rolled to 430, expiration 92, sell call, break even 21.17 debit, where the price would be 86.17. So if 86.17 is my price break even, 92 would be where it gets called away. That's just under $6. So 92 minus 86.17, 583. It's about $2,300 gain per account, which isn't bad. I've got 400 contracts, 200 contracts on a lot of these accounts. But part of me wants to be a little bit more bullish on bonds. I'm not. I think I'm just going to take this as a bit of a one-off. But yield-wise, like this is somewhat encouraging. I'm hoping that the yields will continue to fall. I'm going to set a chart alarm. Let's move it down here actually and see if this actually does some pretty impressive coming back. I don't know if we're going to get too much lower than 4%, but I certainly wouldn't mind seeing bonds go as low as possible. 4.15. I'll set a 4.20 chart alarm here. Sliding lower. Okay. So let's talk top down. Room to fall. It's pretty simple. NVIDIA has earnings tomorrow. I hate to say it, but the entire market's going to care. So NVIDIA tomorrow after market, we are sliding pretty hard. I thought NVIDIA realistically would be kind of hanging in there right before earnings and kind of staying right in the middle between this high and this low. We're already seeing a lot of pre-market move where just flows are pushing prices lower. I'm not going to position for NVIDIA. I think that if it's in the middle, you know, we can go higher, we can go lower. It's a bit of a toss-up trade. Now the flows have come in for the last 3 days to follow suit. Look, it's pretty simple. Guess what stock's going to be down? Mags. Boom. You want to see what the market's selling off 3 days in a row? Mags. You have so much market cap in this between all of your, and you can throw in even 8 here. Like it doesn't include AVG or Broadcom, but basically your Mag 7 selling off for 3 days in a row, and that move, and this is going to be wild. I don't know if the percentage is going to be the same, but we have a drop of around 7% in the Mags.
Did you know we do a live trading show Monday through Friday with guests from all over the world? To get notified when we go live, click the bell button next to the subscribe button or check in at 9:30 a.m. Eastern Time. We have helpful, free content in the description below and on our website, a1trading.com. Thanks for watching today's video, and we'll see you tomorrow.